Good morning. Thank you for joining today's daily webinar. Give me a moment here while I check our sound here. Okay. So, again, thank you for joining today's daily webinar. Are you self-employed or looking to maximize your retirement savings, even for a prior year? If you are, then you've come to the right place. As always, please subscribe to our YouTube channel, give the video a like, and let's dive in. Today's topic question is, can I retroactively contribute to a solo 401k? The short answer is yes, in many cases, but there's a catch or two. So in this video, we're going to break it all down. Today's presentation is for educational purposes. Don't hesitate to shoot over any questions you have during the live chat, and we'll pause and answer those questions as they come in. Whether it's a question surrounding solo 401k plans, self-directed IRAs, or even the business financing 401k, we can cover those questions here on the live chat. It doesn't have to be questions pertaining to today's topic, which is, can I retroactively contribute to a solo 401k plan? So here's what we're going to break down today. Who qualifies to make retroactive contributions? Deadlines you can't afford to miss, the difference between employee and employer contributions, how to still claim a 2024 tax deduction in 2025. And why opening your solo 401k before the tax deadline matters most. So again, go ahead and subscribe to our YouTube channel for more webinars like this, and shoot over any questions you might have. So who qualifies to make retroactive contributions? It depends. It depends on a couple factors. One, how your self-employed business is taxed. And second, whether you're making employee contributions, employer contributions, or voluntary after-tax solo 401k contributions. So with respect to the entity type, if your self-employed business is taxed as a S corporation, for example, and you want to make contributions for tax year 2024, and you're just now opening the plan here in 2025, that is, you're signing new plan establishment documents here in 2025, then you're only going to be able to make employer contributions, also known as profit sharing contributions, as well as voluntary after-tax contributions. And you can do so by September 15, which is the extended deadline for an S corporation, whether it's an S corporation or an LLC taxed as an S corporation. If your self-employed business is taxed as a sole proprietorship or a partnership, then it's also too late to make employee contributions for tax year 2024 if you are opening the solo 401k plan for the first time here in 2025, but you will be able to make employer contributions and voluntary after-tax contributions. Now, don't confuse the December 31st, 2024 setup deadline. Those individuals that already opened the plan by December 31st of 2024 or already have a solo 401k plan, they can make all contribution types here in 2025 for 2024 by their business tax return due date plus timely filed extension. So for instance, if your business is taxed as a sole proprietorship, you would have until October 15 of 2025 to make all of your 2024 solo 401k contribution types. That is employee, employer, and voluntary after tax. Same thing with the S corporation, except it would need to be made by September 15. So those are the differences with regards to the contribution deadlines. Now let's talk about the difference between employee and employer contributions. Let me go ahead and share my screen. Let's see here. Give me a moment here. Okay, so hopefully you can see my screen here. Let's go to the contribution page. So with respect to contributions, a solo 401k plan allows for both employee and employer contributions as well as voluntary after-tax solo 401k contributions. Typically, the employee contribution and the employer contribution can be made by your business tax return due date plus timely filed extension, provided that the plan was established by December 31st of the prior year, as we've already touched on. So, for example, if you wait to open your solo 401k plan here in 2025, you can make 2025 contributions. The overall limit for 2025 is $70,000 plus a catch-up limit of $7,500 for those who are age 50 or older. And then there's the super catch-up of $11,250 for those who are age 60, 61, 62, or 63. So instead of contributing the $7,500, you can contribute the $11,250 catch-up. You can contribute both, of course, and that 11,250 is only available in 2025 as well as future years. So it's not available for 2024. So from a contribution perspective for 2025, you can make an employee contribution of $23,500. You can make an employer contribution of $46,500. You can do a catch-up contribution of $7,500 if you're 50 or older, or you can contribute $11,250 as a catch-up contribution instead of $7,500 if you're age 60, 61, 62, or 63. So the overall limit from a contribution perspective for tax year 2025 is $70,000, unless you're age 50 or older, or age 60, 61, or 62, or 63, in which case you qualify for one of these catch-ups. For 2024, the overall limit is $69,000 with the catch-up amount of $7,500. Now let's talk about voluntary after-tax solo 401k contributions. Voluntary after-tax solo 401k contributions can be made for 2024 here in 2025, even if you open the solo 401k plan here in 2025. So just like an employer contribution can be made for 2024 here in 2025, if you open the plan here in 2025, same rule applies to voluntary after-tax solo 401k contributions. So you could forego making employer contributions for tax year 2024 and solely make voluntary after-tax solo 401k contributions up to the overall limit of $69,000. So $69,000 is the overall voluntary after-tax contribution limit, which can then be converted to the Roth solo 401k or the Roth IRA. It's important to note that catch-up contributions can never be applied to the voluntary after-tax solo 401k bucket. It's also too late to make catch-up contributions for tax year 2024 if you're opening the solo 401k plan here in 2025 for the first time. Of course, you will qualify for making 2025 contributions for tax year 2025 now, and you're going to have until 2026 by your business tax return due date plus timely filed extension to make all contribution types, as I touched on earlier, including these catch-up contributions. So using the voluntary after-tax contribution example, you can forego making other contribution types to the solo 401k for 2025. That is, you don't have to make employee or employer contributions and solely make the voluntary after-tax contribution up to the overall limit of $70,000 and then convert that to the Roth solo 401k or the Roth IRA. Now, if you do have the income to support contributing more than $70,000, you could contribute the $7,500 catch up if you're age 50 or older as an employee Roth contribution or as an employee pre-tax contribution. Or you can also contribute the $11,250 super catch up for those who are age 60, 61, 62, or 63. And that would go in as a pre-tax employee solo 401k contribution or as a Roth employee solo 401k contribution. And you would contribute $11,250 instead of $7,500. So you can contribute both, in other words. Okay, it looks like we've got some questions here. Let's pause and take a look at the question here. Let's see here. Can I collect rents and cash deposit them into my account and wire them to the solo 401k account? Or would that be a no local bank deposit directly? Yeah, you certainly cannot collect rent and cash and then turn around and put that into your personal bank account and then deposit it to the solo 401k bank account. Instead, those rent checks for that rental property owned by the solo 401k need to flow directly to the solo 401k bank account. Now, you can manage that property as long as you don't get compensated for managing the property. Managing the property would include collecting the rent check that's made payable in the name of the solo 401k plan and then depositing it directly into the solo 401k bank account, not into your personal bank account, as that would be considered a distribution. And the IRS could challenge it as a prohibited transaction, therefore saying that your entire solo 401k has resulted in a prohibited transaction. So those are things to understand. Okay, it looks like we have another question here. Let's take a look at that question here. I have to complete the 5500 easy using the accrual method since that's what I've done in previous years before I signed up with your company. I had 300,000 as of December 31st, 2024, including 23,000 elective deferral made in 2024. Then I made a profit share and employer contribution of $8,000 in 2025 for 2024, and after-tax contribution of $30,000 in 2025 for 2024. Should line 6A see end of year assets be 308 or $338,000? Well, the key is that you use the same method each year. So therefore, you can go ahead and use the $338,000 method to include those contributions made for 2024 here in 2025, but make sure you also perform the 5,500 easy reporting in the same method in the following year. So next year. So the key is to be consistent with respect to how you report the market value of that plan when you include contributions made for the prior year by the business tax return due date, but before you file the Form 5500 Easy. Keep in mind that the Form 5500 Easy is an informational return. It's not a tax return. So it's a way for the IRS to get a snapshot of what has transpired in the plan, including the total value of the plan. Also, should the after-tax contribution of $30,000 be included in 7B for $53,000? So the voluntary after-tax contribution is considered an employee contribution. So you would need to report that on that Form 5500 Easy according to how those contributions are made. So let's look at a Form 5500 Easy. Let me pull one up here just to make sure I tell you the exact label where that needs to be. Give me one moment here. So let's look at 7B. So 7B is participants. So yes, the IRS uses line 7B to refer to employee contributions, and employee contributions technically fall, or I should say, voluntary after-tax solo 401k contributions technically fall under the employee contribution category for Form 5500 easy reporting purposes. With respect to reporting the total value of the plan as at the end of the year, that's going to go in 6A 2, right there. Beginning value, that would be the value of the plan as of December 31st of the prior year. So if we're talking about filing a Form 5500 easy for tax year 2024, you would put the value of the plan as of December 31st, 2023 in 6A. And then the value of the plan as of December 31st under 6A2. Okay, let's uh, turn to our webinar covering today's topic, which is, can I retroactively contribute to a solo 401k? Again, don't hesitate to continue to shoot over any questions during the live webinar here. Also, make sure to subscribe to our channel here to so you get notifications for to more videos like this and more topics. We typically go live every day, twice a day, so we'll be live again tomorrow. With respect to the topic today, can I retroactively contribute to a solo 401k? We discussed that in depth. We discussed how it depends on whether you're making employee contributions, employer contributions, or voluntary after-tax solo 401k contributions. Let's take a look at another live question here. So we've got a question here regarding what is the deadline for after-tax contributions? As we touched on a little bit earlier, if you're opening the solo 401k plan for the first time here in 2025, the deadline to make the voluntary after-tax solo 401k contribution for 2024 is going to be based on how your business is taxed. If it's taxed as a sole proprietorship, it would be October 15. If you filed an extension, if it's an S corporation, for example, you have until September 15 to make those voluntary after-tax solo 401k contributions. If you already have the solo 401k plan established prior to 2025, then same deadlines apply. You would have until September 15 in the case of an S corporation. In the case of a sole proprietorship, you would have until October 15 of 2025 to make the 2024 voluntary after-tax solo 401k contributions. Okay, I got a question here. Form 5500 easy, can I file myself if I have not sent info? You certainly can. We provide the Form 5500 easy at no additional charge for our clients, and we file it electronically for our clients who timely request that Form 5500 easy. Keep in mind, we don't have access to our clients' funds, so it's important that you notify us on a timely basis when you need assistance filing that Form 5500 easy. But yes, many of our clients will file on their own, but a large number of our clients also have us file for them because we file it electronically with the IRS. That way they don't have to worry about having it printed and mail it to the government. Okay, I got another question here. If S Corp was not established until 2025, can a contribution be made for 2024? Yes, you can make voluntary after-tax solo 401k contributions if you establish that solo 401k plan here in 2025. However, your question here deals with the fact that you just opened the S corporation here in 2025. Therefore, no, you would not qualify to make contributions for 2024 because your business was not in existence in 2024. It was not in existence until 2025. So great question. All right, let's pause here for any other questions. In the meantime, We covered today's topic was, can I retroactively contribute to a solo 401k? We discussed that topic in depth. We'll be back here again at 1 p.m. Pacific time today. And of course, we'll be back here again tomorrow. And we're here typically twice a day. All right. Thanks for participating in today's daily webinar. I don't see any other questions for now. So until next time, have a great rest of the day.